Good afternoon, Scott Redler, T3 Live. Welcome to Tuesday's recap. You would think there's a Fed day tomorrow with the lack of action we've had today, with the lack of conviction we've had today, but whenever you're trading, it's like, okay, why is it so slow? Why is it so thin? You know what? Markets had a huge move this year. We just broke a minor accelerated uptrend. We're in a neutral spot. The street's a little bit worried about what's going to happen tomorrow. What are they actually going to say? What are they actually going to do? So it kind of makes a little sense where they're not letting Soxers break out. They're not letting some things break down, but there's small pockets of action. So if you don't overdo it, there's definitely some things to do, some money to be made. And if you're doing too much, I could see why you would be frustrated. But all in all, you know, depending on what time frame you trade, things look pretty much like they've been taken in stride. You take a look at the chart of the SPX, you will see, as far as just say like a macro basis, you know, here's that trend line. You could draw it many different ways. Some people even draw it a little closer, you know, where this time it actually went below it right here and then came back above it, so it was really just a bit of a fake out. With that being said, recently we've talked about this upper area, almost like if you want to break it down into a few different intermediate trends like we did here. This was that red dog reversal. This is when it broke the descending channel. Here was your commitment to it. Here's when it took out the prior high. And then it kind of trended higher. And then if you wanted to draw this line here, when it sort of broke this more accelerated channel, if that's what you look at and that's what you trade, you had two spots to make adjustments. You had one right here at the 8-day, another one when it closed below the 21-day. Yesterday, you had a bit of a gap up. We talked about if the bears want to contain some or maintain some kind of selling pressure. You know, this is a spot, half of this wide-range engulfing bar, and that's what they did. And then today was like another inside quiet day. So the question is, what is next? And if you look here right now, you could see you do have a few things going on here. You know, short term, that is. Short term, some bears are saying you have a double top, 1, 2. Then you have, obviously, this push down to the bottom, and now you're in the lower end of this channel. So with that said, tomorrow, if the bears, again, want to maintain control, they keep the S&P probably below 1792. You know, I guess they could push the envelope a little bit more, which would be about, you know, a little bit closer to 1800. But either way, you know, this is that trend line that we came up, retested, so maybe even a little bit higher. But all in all, you know, sometimes it's very erratic where they push it higher, push it lower before some real direction. So all in all, you know, there's some wiggle room within here. But if I guess the street doesn't like what the Fed has to say, or the action warrants it and it starts to trade below this area, you know, you then have the 50-day, which is closer to 1765. That would mean we'd have to go below 1772 and then figure out, because there are some people saying that you have what they think is like a rounding top or a head and shoulders top right here with 1813. The neck now, I would say the neckline actually was right around here-ish, about 1782. So that brings you even lower, where you have closer to this other support, which is around 1740. So with that being said, what to do? I'll tell you what not to do. Don't overdo it. I'll tell you what not to do. Don't try and make your entire year, you know, in the next week or two heading into Christmas because you're behind the you know what. And just don't try and revenge and don't try and manufacture things that aren't there. So tomorrow, what I think will happen is I don't think that they're going to do a $10 billion in reduction. If they do that tomorrow, you'll probably see a pretty quick move to the downside. Maybe down to that level of 1772, maybe down to the 50-day now at 1765. And then perhaps after that, then they'll say, wait a second, that means the economy is getting better. That means they're on that process. Maybe it'll be a spike down to then come back up, and then we have a new point of reference. But if it's not what, you know, if it's like, oh, this is the start of the process, and you see banks get weaker and other things start faltering, perhaps that could trigger that pattern and we get more downside, and then Santa Claus doesn't come. I kind of don't think that happens that way. I personally think that they do nothing as far as taper, but they give you very, very strong language that it's going to happen in January and give you no reason to really think it's going to go past March to start. With that being said, you'll probably get a lot of the Fed action back and forth, and then close okay. And then we probably get a lot of the same into Christmas or into New Year's, where, you know, that 1772 we trade versus that, and then figure out what stocks are acting well, look where the volume is, look where the best setups are, and continue to make some tactical cash flow with some risk lower. So with that said, let's take a quick look around the horn. Today, Twitter was my focus. Came in short Twitter, and it gave you a really nice trade today. Okay, so if you look at Twitter, first of all, this is when it triggered above 42. If you were short, that was your cover, especially after it reclaimed this false breakdown. Then this was another area where you could have been a buyer, and then another area when it took out the IPO high. From there, it happened pretty quick and hard to chase. So the red dog reversal triggered right here at 59.41. You could have been short with a stop at the high of the day, made some nice money yesterday, and then this morning it opened up, went from green to red, so that could have been an add. You could have even added below yesterday's low, and then you had a quick little tail down, and I think I sent the chart out somewhere in here, and I said I'm done with this thing around 55.5, and it had a dollar rally. And now let's see if it could develop a new bull flag type pattern here where we trade and let the moving averages catch up, because ultimately I don't think this is the high of Twitter moving forward. I'd like to actually figure out a way to get involved on the buy side and then continue. So this was my cute day and a half trade. We'll see what happens next. Facebook's still strong. Facebook's still trending higher. Remember that red dog reversal right here? When it traded below the prior low, came above it. This one gave you a red dog reversal this way, and then it broke the descending channel here, and then showed some commitment higher, and then you had a trade here, and then you had a trade here, and now look where it is, actually closing right around the old highs. Showed some strength, showed some two-way action. The stock's been an unbelievable trader since 2 quarters ago when they reported earnings. Here was a nice trend, nice little correction. There was your pivot. From there, back to the highs. Hopefully you were involved. As far as Apple, people keep asking me about it. Why isn't it acting better on the China Mobile News? Is it telegraphed? Is it this? Is it that? To be honest, I'm not sure. Okay, all I do know is that you had this nice lower range in Apple that we maneuvered pretty well. You had Apple change its character right here on that gap up 2 quarters ago. That was when we started to think about it as an A play again. Quick move. Here was your retest. And then in here, this was messy and this was choppy and it was, what? And then you had your nice little pennant where it broke above. Then on the last earnings, kind of reversed, saying need some time. Then into Thanksgiving, after it built a new pattern, it went again. And now here it is building another pattern. So with this being said, some might have taken a call spread into tomorrow, just in case they come out and it responds positively. It's not like it's pricing it in perfectly. It was as high as 575, and look where it is now at 554. I'm hoping that if they do come out with some news and there's some volume that shows relative strength, that we have time to be a buyer around 560 or 562. That means it's leaving here, kind of like it left here, kind of like when it left here. Until then, I'm keeping it small. It still thinks that it still feels almost like this 21 days a magnet, but we shall see. It has come a long way. So, with that being said, this is a pretty darn long way since the summer. But if you look at the weekly chart to where it came from, okay, obviously there's some people underwater and well, it's not at the high. So here is one resistance level going across, and here is another. Hopefully you looked at this pattern way back when, and you didn't suffer through when this trend broke, or you didn't suffer when it did a false breakout, or when it broke the 50-day for that move lower. We pretty much tactically approached this the entire way. Granted, not really short it the majority of the time, but at least didn't really get hurt trying to be long. And then this is when it changed. And now it's still in this trend. It's still acting well, and we'll continue to see as long as this trend holds. I do think that we could see a move all the way up to the 600, 640. So we'll see what happens tomorrow if this stays intact or somewhere around there. As far as other high beta tech, I'm not going to really get into it. Amazon still hanging around, looks decent. Google tried to get above this little level here. We got to go back to the daily chart. Still, pretty lethargic. There's a lot of lethargic trading in high beta land because the market's not sure what it wants to do, but it's still above this trend line here. So until that breaks, I don't think you can get short on the brain there. Netflix also is a little wishy-washy, but it still continues to ride this trend, just not a lot of power. So, let it just continue to trend here, and at some point, maybe you get a momentum trade again above into new highs. Tesla gave you a pretty nice trade at lunchtime. The stock's been trending up ever since this small red dog reversal right here. Okay, and then it broke this downtrend, and then you had another little in this range of red dog reversal. Take a closer look. Let me show you how it looks within a range. You have a range here, like 4 days, dribbling lower, then it trades below. This was 136.30, comes back above. There's your swing long. Gave you a day and a half move, held higher, broke out, went sideways, looked strong again today. So we'll see how much further this can go. Overall, it's trying to build a new trend. You know, we were riding this thing a lot during this move. And then it started to change its complexion, like right around here-ish. Remember, it was riding the 21-day for the majority of the time, and then here's where it closed below, and at the same time, the market was making highs, and this didn't. And then also, here's your earnings day. On this day, it gapped lower and lost a 100-day. So lots of different ways to navigate this guy. As far as some of the banks, you know, not really seeing too much. I do think that if Goldman or if the banks want to go tomorrow, maybe they use Goldman as that vehicle. Hasn't really closed above 170 for more than a day or two. This is, I guess, day 2 closing above it. It did hold in there. Tomorrow we'll see if it could show relative strength and take out this 172 area. Sometimes, in my humble opinion or through my experience, they want to push the futures around. They could use Goldman. First time Goldman on the highs while some of the other banks are, you know, have all corrected. So with that being said, you know, it's worthy of a look. Bank of America is still kind of dribbling lower. Last time the banks went, look how quickly this went to highs, and Goldman didn't. This time Goldman showing a little relative strength, so it's worth keeping an eye on. Maybe it wakes up the banks, or maybe they use Goldman as a push-through failure vehicle to do whatever it wants to do with the market. And really, there's not a heck of a lot to talk about. Most stocks on a longer-term level are holding in just fine. Some of them on a shorter-term, more accelerated level have been bending a bit but aren't broken. You know, if you're going in tomorrow with some risk down, trading for P&L or alpha, I think that's the way to go. There's been lots of day-and-a-half to 3-day moves that you could take 3 to 5% out of stocks without having to worry about excessive exposure. So with all that being said, tomorrow we'll be on the radio. I'll be in the chat. You know, if you haven't signed up for a week VTF subscription or a free trial, I would sign up perhaps for tomorrow. You know, I'll be on the radio probably between 9:30 and 11 talking about what I'm seeing, and then I'll be on the radio for when the Fed speaks at 2 o'clock through the close, so you can see how we try and help navigate it with the community. And obviously Sperling will be on, and the other guys, you know, whether it's Mike Lee or Steve LeVay or Robin DeBlock. So, you know, take the time, if you haven't done it, log in, see what it's all about, and see what the community is saying, because the community adds a lot of value. And if you haven't joined the VTF and you hear me talk about it on Twitter, or you hear me talk about it in other areas, you know, I know it sounds like it's a lot of money, but you know, there are guys that say that within the first week, with the few trades that they see me execute on my plan, they make the money that you know, could cost them the entire year or the entire month. And if you're a professional trader and you trade in front of your screen every single day, then I think it's such a useful tool. If you're not in front of your day all day long and you have a job and you just look at this at night, I think off the charts is for you. You know, maybe even the price point sheet, because at least we give you the best setups that you could call in orders to your broker too if you don't execute them yourself. And we also have coming out the 2014 thesis relatively soon. So hopefully you'll look for that. You know, I've done it the last 2 years. If you want to Google Scott Redler 2013 projections or 2012, you'll see that there's some pretty nice nuggets in there, lots of consistency. So I'm hoping to do that again for all of you coming into this year. So with that said, lots you could use, lots of resources if you're feeling like you're frustrated and out of place, and just take some accountability and start to use them instead of complaining about the stock market, because it can help you build a financial future. With that said, have a good night.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.